Today, I'll focus my remarks on the ESG Disclosure and Simplification Act. GRI welcomes this legislation. It will strengthen ESG reporting by companies, and it will protect investors. And specifically, the bill will level the playing field for both companies and investors. It relies on international standards, and by doing so, it will not increase reporting burden because the vast majority of companies are already reporting, and they're already reporting to the GRI standards. And it will protect investors by creating essential, clear, and comparable data. Let me just share some brief background on GRI to explain why we support this legislation. We were established in the United States by Ceres, who's represented on the panel today, and we became an independent organization in 1997, over 20 years ago. Our success over 20 years is really based on the old axiom that you manage what you measure. All organizations, including the ones I previously worked for, run on data. And by identifying, measuring, and most importantly, reporting ESG topics, you tend to improve performance on these topics. And this is not just some theory. I have seen this firsthand in the companies that I've worked for. Two of my former employers, Intel and AMD, have actually been reporting ESG information for over 20 years. For these leaders, it's not just about accountability with investors outside the company. This information is a very important decision tool inside the company. We created the GRI standards to provide the tools needed for companies to collect and report ESG information. But over the years, we have continuously improved these tools. Perhaps the most significant change we've made in the last few years was to completely revamp our governance model to become the world's only independent, international, multi-stakeholder standard setter for ESG information. And we did that by modeling our governance model on the same governance that the financial standard setters have. And largely as a result of this process, we are now the most adopted ESG standard by both companies and policymakers. Today, more than 90% of the largest 250 companies on the planet are reporting ESG information, and 75% of those are using the GRI standards. Here in the US, the number is about 600 companies using the GRI standards, and about 80% of the Dow Jones Industrial Average. Globally, the market for this information is exploding. We had some information last year that the assets being managed with some form of ESG information are now over $30 trillion US, and that's larger than the GDP of the United States. And it's grown by 34% in the last 2 years. It's growing because investors know that so-called non-financial information can have significant financial impacts over the longer term. And policymakers around the world have not missed this trend. They're following this trend. We are tracking right now 139 policies in 61 countries that specifically reference or require the GRI standards. 60 of those policies in 45 countries are capital market regulations. So just like financial disclosure, it's essential that this committee and policymakers around the world focus on a single global standard, because we need a common global language if we are going to unlock free trade and capital flows that increasingly depend on this information. So in conclusion, I want to applaud the committee for the ESG Disclosure and Simplification Act. It will protect investors, it will help unlock free trade, and ultimately, it will help align capital to sustainable business practices. Thank you for this opportunity to testify today.